Hello. 10 o'clock on Friday night. Tonight we're going to have some lemon and some water with some cranberry. Delicious. Today we had a huge sell-off in the precious metals market. Before I get started, I just wanted to give a shout out to our friend Howard at Curve. He sent me these nice little gold bars. I got a bunch of them in a box. Thank you, Howard. It's upside down. It says Curve. Pretty cool. It is not sponsored by Curve. I just wanted to show my gratitude. Send me a message if you want some of your own. A lot of things happened today. A lot of things happened in specifically the precious metals market. Really, the big news today was Trump's announcement of his choice for Fed president, which was Kevin Warsh. Now, Kevin's background, he was the youngest member to ever be appointed to a Fed position, board position back during the Bush. He was in his mid-30s during the Bush admin. He's like 55 now. He's a relatively young guy. At the time, now I believe he had an undergrad from Stanford, went to Harvard. He does seminars for like private equity and hedge funds now. He's very well versed in finance. He knows his stuff. During the Bush admin, he was all about quantitative easing, because remember we had the big sell-off. Huge issues during the Bush admin. We had obviously like stuff in 9/11, massive sell-off there at the end of at the tech bubble sort of thing, and then we had the housing crisis at the end of the Bush admin. 2007, 2008, we had the crash. He was around during that time. Money printing, quantitative easing, and you guys see what happens now. Okay. Then, obviously, Trump, I'm going to say 1.0, he put Fed Powell in the position of where he is now during Trump's first administration. Kevin is a centrist. And his news today was, thanking Trump for, his proxy vote. However, Kevin isn't for necessarily money printing and inflationary, bringing the interest rates down causes inflation, long-term inflation, not immediate inflation. And he doesn't really want that. So what happened? Big sell-off in the precious metals market. And the Dixie, the dollar index, it went up. It recovered very well. It was falling. So that's basically the reason, in a nutshell, why the market kind of flip-flopped the way it did. Why everything else sold off? Again, it was really just because of strengthening of the dollar. So the way I want you guys to think about this is when assets go up, whether it is a gold or stocks, it is a flight to safety. It is a de-risking. In my wallet, it is a de-risking from fiat. So here's some, here's some hundreds and 20s and stuff. If this loses buying power, people go buy assets. Apple, they go and they buy assets as a risk off. One of the big things this year has been gold, precious metals, copper. And the reasoning for that was they go, all right, well, so we got the AI trade, we got quantum, whatnot. We need to risk off against the falling dollar. Okay, not a problem. Typically, you'd go into bonds, but we're also bringing down the value. We're going to an exporting country as opposed to an importing country, and we're trying to bring down inflation at the same time as pushing stocks higher. All right, so bonds are going to become less valuable. So that's not really you wouldn't want to go risk off and go into bonds, right, as a safe haven, because they're not going up. That wouldn't make any sense. Now, if inflation, if you know if the Fed chair came out and said, hey, like, we're expecting record high inflation, okay, you would probably jump as like a margin of safety into, an asset that protect against inflation. TIPS, for example, is like an inflationary hedge, where it's a bond, but it's adjusted to match inflation, so it gets adjusted up. That's a very common. Actually, the Fed actually buys those. They buy 5-year TIPS, okay, and you can buy them as an investor. You guys can buy them, so that's common. But people are always hedging against or de-hedging against inflation. Now, with the new Fed president saying, he's not for inflation, that's a dollar strengthening, so people are going to sell off of assets. Okay. That's basically, in a nutshell, what happened. Now, I'm thinking, what else happened? Some big news happened today. The Senate passed the spending bill. Okay, today was the final day, but before government shutdown. It's shut down. Technically, it's shut down tomorrow, which is Saturday. Again, I'm making this at 10 o'clock at night on Friday. Tomorrow, which is Saturday, the government shut down. Government employees shut down. So the House of Representatives had passed the spending bill to keep the government open. The Republican is leading the House. Democrats are leading the Senate. Today, the Senate House, Chuck Schumer finally got the votes. The votes came in at 71-29 from the Senate to pass the spending bill. They had to make some changes in the spending bill, along with Trump's. He agreed to it. Now it has to go back, because they made changes. It has to go back to the House to be reviewed to see if Republicans will sign off on it. Republicans signed the bill a week ago. Okay, like, it was all said and done. It took up until now for the Democrats to get it passed. Now we have a weekend with no government. Monday, the House is back in session, and they will have to vote on it. If it passes, no changes, then it can go to president to be signed, etc. If the House makes changes on it and says, like, we're not doing this, it has to go back to the Senate to be re-voted on, and back and forth until all sides can come to a conclusion. That's how it works. Trump doesn't really have a say until both houses are in agreement. Then it goes to Trump to sign. Okay, so that's how that works. He doesn't have any other say outside of that. The House does need a 2/3 majority vote. Okay, so they don't have the filibuster on that one. So House Speaker Mike Johnson will have to bring everyone in and take a vote on Monday. Hopefully, at the earliest, if it gets passed on Monday, Trump's desk Monday night, maybe the government can reopen on Tuesday. That is best case scenario. Okay. Let's go back to precious metals. We got gold and silver. Before I get on to that, I just wanted to touch on Panama real quick, because there was a Panama news this morning. We're really pushing for it. I think this administration is really I think it's going to take it over. And the reasoning for that is, now Larry Fink, CEO of BlackRock, did buy 41, ports all over the globe back in early 2025. The reasoning that Trump wants Panama Canal back is because 70% of the ship traffic that goes back and forth, now it connects both oceans, connects both sides of the world, essentially, without having to go all the way down and back up. It connects both sides of the world very easily. but the United States makes up 70% of the shipping lane traffic that goes in and out of there. If another country owned it, there'd be a lot of, I'm going to assume, probably duties paid, like taxes and stuff, and levies and tariffs and all that stuff, that'll probably all have to get paid. If we own the shipping rights, not only do we get those monies, we also save those monies, which is nice. Okay, that's kind of just the update on Panama. Nothing else really to touch there until I get some more information. I'm not really going to go too much more into depth about that until we get some more information. It just doesn't seem accurate. So gold fell about 12% today, silver about 35%, and that was because of strengthening of the dollar. I wrote down a bunch of notes because this is going to get interesting. So I was thinking about this. What is the relative comparison of the United States versus, the other big players of gold holdings? Like, how much gold does the United States have in comparison to the rest of the world? And then I was thinking, well, what is the gold to GDP of a country? So the gold that the United States holds is in 33 tons, 8,133 tons. Germany came in second place, 3,350 tons. Italy, this one was actually surprising, 452 tons. France, 2,437, again surprising. Russia, 2,333. That one was surprisingly low, in my opinion. China, 2,300. So China actually has less gold than Russia. We have 4 times as much gold as Russia, China, just about France and Italy. The IMF, which is the whole monetary fund, the International Monetary Fund, only has 2,800 tons of gold. So we are the big swinging D of the gold world, just so you guys know. So again, the United States has 8,100 tons of gold. The next closest country, which is Germany, has 3,350 tons. It's less than half of what we have. That's the next closest country. And Germany is probably, the Swiss are really, really close. I think Germany has the closest, has the best performing like GDP per capita in all of the EU. So that's probably why. So then again, I was thinking, but what about GDP per gold tonnage? And this one will surprise you because it's not anything like you would think. Or maybe you would. Maybe you're just genius. Switzerland. Now, remember, GDP is gross domestic product. Okay. So we're measuring. So I'm going to explain to you how this works. It is the tons multiplied, how many tons a country has multiplied by current spot price. So in this case, I did 5,500 being the spot price. And then you're going to divide, so it's GDP divided by tons multiplied by spot is how we get this percentage. Okay, so Switzerland has the highest ratio. They have 1,040 tons. Now Switzerland's relatively small. The GDP is, I didn't write it down. I didn't write down the GDP for some reason. The percentage ratio, it makes up about almost 20%. It's like 19% of their GDP is how much gold they have. Germany, 3,350 tons. GDP is 5 trillion, makes up about 12 to 13% of their total GDP. Italy, 2,452 in tons. GDP is about 2.4 trillion. 17% makes up their GDP of gold. France, 2,437 tons, as we discussed earlier. GDP is 3.2 trillion, so about $1 trillion more than, France has $1 trillion more in GDP than Italy, and they have almost the same amount of tonnage of gold. Italy has slightly more gold. So it makes up about 14% of France's GDP. USA, so again, we have 8,133 tons, valued at 1.44 trillion. So the tonnage of gold we have valued is more than the GDP of most countries. So just keep that in. We have this physical block sitting somewhere in a vault somewhere. It's probably the size of my living room that has a value of more than most countries. So just keep that in mind. Again, our GDP is 30 trillion. So that means our gold to GDP value is only 4%. That's really, really low. Whereas, like Switzerland again is 19%, Germany is 12%, Italy 17%, France 14%, USA is 4%. Okay, so which means that we are not as hypersensitive as a country to this moving up and down, whereas Switzerland just saw a massive move, right? You figure 20%. 20% is huge. And again, gold fell 12% today. That's like massive movement. The United States, didn't even pay attention to it. Here's something very interesting. You know who wasn't impacted by gold today because they don't own any? Canada. Justin Trudeau sold all of Canada's gold back in 2016. They have no gold. Zero. I have more gold in this gold bar that is styrofoam than Justin Trudeau has. This has probably a flake of gold somewhere in it making a connection, or these have more gold than Justin Trudeau has. The entire country of Canada, my earpod probably has one gold flake somewhere making a connection that has more gold than Canada. They buy currencies and treasury notes. They don't own any gold in their balance sheet. Fun fact. Do I even really want to get into this? I'm usually plagued by someone in my comment section asking me, well, what if people, what if the BRICS nations stop using US dollars? It's a pretty good question. Let's think about who the BRICS nations are, okay? It's Russia, India, Brazil, and South Africa. Russia, India, Brazil, and South Africa. All of them only have 6,000 ounces. They have like 30% less gold than we do. All of them collectively combined. So let's assume for a second that they go, you know what, we're going to get rid of all U.S. currencies, all U.S. debt, all U.S. treasuries. We're no longer going to transact in those. And we're going to go back to a gold standard. Again, we have over 8,000 tons, and collectively they only have 6,000 tons. If they go back to a gold standard, these BRICS nations, and they force the price of gold up, the United States is just going to get richer faster. Like, how dumb can you be? This is, again, Russia, India, Brazil, and South Africa. Collectively have 6,000 tons, and we have over 8,000. So just kind of throwing that one out there. And just so you guys know, I did make a trade in the U.S. Copper Index Fund. If you're going to be holding copper, why not put a USA in front of it? I mean, it just screams, what our president is trying to do. And why not just hold copper? Copper's a great asset. It's not going anywhere. You kind of need it. So, cheers. And we'll see you guys later. I apologize, I didn't finish my thought. After this bill is passed, expect everything just to go back to normal. They just passed like a $1.5 trillion spending bill. The money's going to come out of thin air. It's quantitative easing, baby. Let's go. Asset prices are going to go up. The dollar will fall again. And we're just going to repeat the cycle. Right? Repeat.
Return on cash, where macro meets more. Harness the power of the market. Elevate your returns.